tech leading the market higher this year, but it's the Dow legacy names that are really leading the pack. Dom Chu's back at the newsroom to break it all down for us. Hey, Dom.
Well, Melissa, that blistering run for the Dow back towards record highs just means that every stock, or just about every stock in the blue chip index, is in the green so far this year in 2019. Yes, we know that it's easy to post a 12% year-to-date gain when you fall by as much as you do in the fourth quarter. But what may be surprising to some traders and investors is that it's technology that's leading the way higher in the Dow, and that's because it's the Dow. We're talking about the biggest big cap names in the business. The three best year-to-date performers in the index: Cisco Systems, up around 28%. Apple, up around 27%. And IBM is up around 26% as well. If you expand it out further to the top 10 names, you'll find that both Intel and Microsoft are in there, gaining around 18% apiece. So old world tech is ruling the roost for now. As for what's lagging, it's healthcare names like Johnson & Johnson, which is up only 5%, but Pfizer is actually down around 2% year to date. That tech trade, Melissa, may be the relatively safe way to get cyclical exposure, but doing it through stocks seen by some as relatively less risky. We'll see if that trend continues into the second and third quarter and for the rest of the year. Back over to you.
All right, Dom, thank you. Dom Chu in the newsroom. So, of course, this is the perfect time to play a little round of
Trade It or Fade It.
Fantastic.
That's right.
Exciting.
Yeah. Legacy
That's fun.
Tech Edition. I think we know how the rules work by now.
Can you let us know?
No, we're going to just kick it off with Tim.
I'm good with this.
Cisco up 28% this year. Tim, traded or faded?
Feeling confident. I'm going to trade Cisco. Look, to me, this is a stock I'm long. It's a stock that in mega cap tech land is the best combination, I think, of certainly valuation, possibly earnings growth, but think about where these guys have gone. They went from proprietary hardware to now effectively proprietary software. They're all about cybersecurity. They have an end-to-end solution on networks. I love this company, and this is a name. I stay there. I'm trading it again.
You know what? I'm with Tim on this one. The chart looks fantastic. The technicals, if you look at this, 5-year highs, 1-year highs, you know what happens at 5-year highs? Everybody's happy. Nobody wants to sell. Everybody has a profit. So this one, as long as the market keeps running, Cisco looks like it just wants to keep on running with it.
Sorry, guys, I got to fade this one. So it's seen quite the run up in price so far this year, and there's just really not enough growth for me at this stage of the game.
Guy, why don't you weigh in here?
Well, I'm not breaking the tie because it's 2-1, so I can only create a tie.
I never said you were breaking any tie, did I?
I'm glad you didn't say that. So my grandmother used to say to me, little guy, slow and... She'd call me little guy because then I was a little person. She used to say, slow and steady wins the race, and the valuation is reasonable, and they've made a transition. So I think Cisco is fine here. I think it continues to grind higher. Trade it. Sorry.
Trade it.
I thought that was...
I forgot what we were doing.
See, that's why you asked for the rules.
Yeah.
It's a different game.
Yeah. Oh.
Mark Tepper's up next. IBM, this is an interesting one. Traded or faded?
I'm going to fade this one. They just, quite frankly, don't grow. I mean, their top 3 business segments over the course of the last 3 years really haven't grown at all. They are not executing well on their internal initiatives, so I don't know how they're going to execute on their acquisitions. And just, again, they're not growing, so I'd be avoiding this one.
Maybe this could be a value play.
It could be a value trap too, Melissa, and I'm going to fade this one as well. IBM to me, despite the fact that it's an interesting valuation, they seem to have at least begun turning this Titanic. It's not the Titanic, but it's certainly nothing to get excited about in terms of earnings growth or positioning, frankly. Maybe at one point it was a Bitcoin play. I don't know what's going on.
Anymore?
Not. I mean, they have a blockchain division. They make an awful lot of announcements. In that, again, it's the growth. To go back to the Titanic, it trades like it has an anchor around it, right? It just doesn't trade well. So I'm a fader of it as well. Yep.
I'll play the game correctly, and I'll say trade it, although I'm not predisposed to like IBM. But, Pete said something a couple weeks ago that had it's sort of
changed your stance.
It's sort of rolling around in my head.
It's in your head.
You've been mulling it.
Around in my head. Because we used to do a thing on the show called the Power Pitch, and a while back we power pitched the Red Hat. And what did IBM go and do? They bought Red Hat. I mean, remember that whole thing? So maybe that was their Hail Mary. Maybe, although they overpaid through the nose, maybe that's what gets them into the 21st century. So just for, as they say, I'll trade it.
Kicks.
Just for what?
Just for kicks.
Just for kicks. Got it.
as the kids
Careful.
say. Apple,
kids
trade
say.
it or fade it, BK.
You know, this is going to be controversial because people love Apple, but BK is going to fade it here. Yeah, I'm a fader, not a hater. I mean, the thing about Apple here is I'm going to take more of a Warren Buffett approach, right? Where I'm going to let the stock come to me on this. I don't think it's necessarily a bad company, but a lot has been priced in here. They've got a lot of hype into this. So I would wait for Apple to come back probably to the 150 level before I were to trade it. So here I'm fading it.
Tepper.
So this is one I would trade. So I'm going with trade it here. So I think they've done an awesome job transitioning from selling units to offering services. And, we haven't seen sentiment on this stock so negative in quite a long time. This is typically a consensus buy. Right now, it's about 50-50. As it's hitting new highs, once the street flips, the stock's going to pop.
All right, from old school tech to one of the new kids on the block, shares a lift. Major buzzkill today as the stock has fallen to its lowest level since going public in late March, closing the day just above $60 a share. This comes after the dean of valuation, Aswath Damodaran, appeared on this very show yesterday, sat over there, said the stock is overvalued, should be trading at $59 a share. Good call.
My estimate, and I'm bending every single rule to breaking point, is I get to about 15 or 16 billion. I mean, you got a business that lost $1 billion last year, hasn't figured out how to make money yet. I mean, the business model is broken right now across the board on ride sharing.
Plus, we found out today that Uber's valuation will be about $100 billion, and that's about $20 billion less than what had been expected. So is this bust, the IPO boom, turning into a bust at this point, Tep?
Well, I think what this is really about is this is Lyft versus Uber. I think if the valuations were the same, I'd rather own Uber. But what you saw happen is Lyft kind of priced at the high end of their valuation range. Uber is pricing at the lower end, and I think investors at this point are saying, you know what, I'm just going to pull my chips off the table, and I'm going to wait and see what I can get with Uber.
Now, Guy Adami, I know you weren't here yesterday to listen to the professor's full interview, but his point that he made on Uber is that he prefers Lyft over Uber because at least Lyft is a very focused business. You know the geography, which is the United States. You know its business, which is all ride sharing, whereas Uber is geographically spread out. It's got a lot of different businesses like meal deliveries and autonomous and all sorts of other things. And so that's why he would prefer Lyft. So
he
in another,
would you rather yesterday.
Exactly. And so I will toss that question to you.
Or would you rather with a publicly traded company and a private company? No, I'll play the game.
I know it's not apples to apples, but I mean, if you had to choose one that you'd be more favorable about in the next year, what would you say?
My sense is probably Uber, and I would just disagree. The reasons why the professor liked Lyft ahead of Uber, that's why I would flip it back and say that's why I like Uber. I think it's more diversified. With that said, in order to believe in Lyft, in my opinion, you have to believe within the next 10 to 15 years, we're not driving cars anymore. We're not buying cars anymore. And it's this gig economy. And I don't believe that's going to happen. So if I don't believe it, I can't own the stock.
Quick, trade it or fade it, Lyft.
Trade it here at these levels.
Quick, trade it or
Trade
fade
it here at these levels.
All right.